You applied for a credit card in the United States. You filled out the form, you submitted everything, and then denied. No explanation, no help, just rejected. And the worst part? You had a perfect credit score back home. You paid every bill on time. You were responsible with money your entire life. But none of that mattered here. If this happened to you, I want you to know you are not alone. This happens to almost every single immigrant who comes to the United States. And today, I am going to tell you exactly why it happened, and more importantly, exactly how to fix it, step by step. So stay with me, because what I am about to share could save you years of confusion and thousands of dollars. Let's start with the most important thing you need to understand about America's financial system. The United States has its own credit system. It does not care about your credit history from India, Pakistan, Nigeria, Mexico, the Philippines, or anywhere else in the world. When you land here, in the eyes of every bank and every lender in this country, you do not exist financially. You are what they call credit invisible. That means you have no credit score, not a low score, no score at all. Now here is where most people get confused. They think the credit score starts at 0, or maybe at 300, which is the lowest possible number. But that is not true. You literally have no number. There is nothing to show. And when a bank or a credit card company looks you up, their system sees a blank page. And a blank page means rejection. This is not your fault. This is just how the system works here. And once you understand how it works, you can beat it. So let me explain the credit score system from the very beginning, like you have never heard of it before. In America, your credit score is a number between 300 and 850. The higher the number, the better. This number tells banks and lenders how trustworthy you are with borrowed money. If your score is high, banks trust you. They give you credit cards, loans, apartments, sometimes even better rates on car insurance. If your score is low, or if you have no score at all, they say no. The most important scoring system is called the FICO score. Over 90% of lenders use this. There is also something called Vantage Score, which apps like Credit Karma use, but FICO is the one that really matters for most approvals. Now, your FICO score is calculated based on 5 things. The biggest one, and this is 35% of your total score, is your payment history. Did you pay your bills on time? Every single month? This is the most important factor. One late payment can damage your score significantly. The second factor is credit utilization, and this is 30% of your score. This means, how much of your available credit are you using? If your credit card limit is $1,000 and you spend $900 on it, that is 90% utilization, and that is very bad. The rule is to always stay below 30%, so on a $1,000 limit, spend no more than $300. The third factor is the length of your credit history, 15%. The longer you have had credit accounts open, the better. This is why you should never close old accounts, even if you are not using them much. The fourth factor is your credit mix, 10%. Having different types of credit, like a credit card and a car loan, shows you can handle different financial responsibilities. And the fifth factor is new credit inquiries, also 10%. Every time you apply for a new card or loan, the bank does what is called a hard inquiry. They pull your credit report. Each hard inquiry drops your score by about 5 to 10 points. And if you apply for 5 cards in 1 week, banks see that as desperate behavior, automatic red flag. So now you understand the system. But why exactly was your credit card application denied? Let me give you the real reasons, the ones nobody tells you clearly. The number one reason is simply no credit history. Your home country's credit record does not transfer here. There is actually a service called NovaCredit that can translate your foreign credit history into a US equivalent score. And it works for people from India, Mexico, the UK, Nigeria, the Philippines, South Korea, and about 10 other countries. American Express has partnered with NovaCredit. So if you are from one of those countries, that is worth looking into. But for most banks and most cards, your foreign history means nothing. The second reason is your visa expiration date. This one surprises a lot of people. If your visa expires soon, let's say in 8 or 9 months, many banks will not approve a 2-year credit card for you. From the bank's perspective, they are worried you might leave the country before paying your balance. So if your visa renewal is coming up, get that renewed first before applying. The third reason is no social security number. Some credit card applications get rejected automatically by the computer system if you do not have an SSN yet, not by a human, by a machine. Some banks do accept an ITIN, which is an individual taxpayer identification number, but not all. This is why going in person to a bank branch is often better than applying online. A real human can use judgment. A computer cannot. The fourth reason is income verification problems. If your income comes from a stipend, a fellowship, overseas money, or a foreign employer, the bank system may not count it. In 2025, banks like Chase and American Express have actually made their income verification even stricter. If you are a student on an F1 visa, bring your I-20 document, your bank statements, and any offer letter you have. Give them as much proof as possible. And the fifth reason, which is one of the most common mistakes, is applying for too many cards at once. I completely understand the feeling. You just arrived, you need to build credit, you apply for 5 cards hoping one says yes. But every single application causes a hard inquiry on your report, and too many hard inquiries in a short time tells banks, this person is in financial trouble. Slow down. Be strategic. Now let me talk about the hidden fees that catch immigrants completely off guard. When you first open a bank account here, many banks charge what is called a monthly maintenance fee. For example, Chase charges $12 every month for their basic checking account, unless you keep a minimum average daily balance of $1,500, or you receive at least $500 in direct deposits each month. If you do not meet those conditions, they quietly charge you $12 every single month. You might not even notice until you look at your statement 3 months later and realize you lost $36 for nothing. Then there are foreign transaction fees on credit cards. Most starter credit cards charge 1 to 3% on every purchase you make outside the United States, or even in a foreign currency online. If you are sending money home, shopping on international websites, or traveling, this adds up fast. When you are choosing a card, always look for the words "No foreign transaction fee." And then there are overdraft fees. If you spend more money than you have in your checking account, some banks charge $25 to $35 per incident. The good news is that in 2025, a new rule from the CFPB, the Consumer Financial Protection Bureau, now requires large banks to cap overdraft fees at just $5. This is a big change that protects beginners like you. One more hidden trap: annual fees that appear in year 2. Some cards waive the annual fee for the first year to attract you. Then in year 2, they charge you $95, $200, sometimes even more. Always read the fine print before you apply. Now let me give you the step-by-step path that actually works for immigrants starting from zero. In your first month here, your only job is to open a basic bank account. Walk into a branch, not the website, the actual branch, with your passport and your ITIN if you have one. If you have an SSN, even better. Banks like Chase, Bank of America, Wells Fargo, and local credit unions are generally the most beginner-friendly. Ask to open a checking account and a savings account together. This takes about 30 to 60 minutes, and you can do it the same day. If you are a student on an F1 or J1 visa, ask specifically for a student account. It usually has no monthly fees and no minimum balance requirement. In your first or second month, your next step is to apply for a secured credit card. Now I know this sounds strange. A secured card means you deposit your own money, usually $200 to $500, and that becomes your credit limit. You are essentially borrowing your own money. It feels unnecessary, but this is the door that opens the entire U.S. financial system for you. The best options for beginners are the Discover It Secured Card, the Capital One Platinum Secured Card, and the Citi Secured MasterCard. The Discover Card is especially good because it does no hard inquiry initially and has no annual fee and no foreign transaction fee. Once you have the card, use it for small, regular purchases. Your Netflix subscription, your groceries, your phone bill. Keep it under 30% of your limit, so if your limit is $200, spend no more than $60 on it. And here is the most important rule: pay the full balance every single month, not the minimum payment, the full amount. If you pay only the minimum, the remaining balance gets charged interest at 18 to 29% per year. At those rates, a small balance can grow into a serious debt problem very quickly. Between month 3 and month 6, something exciting happens. Your credit score appears for the first time. After about 6 months of consistent on-time payments, the FICO system generates your first score. You can check it for free at annualcreditreport.com. That is the official government-authorized site. Or you can use Credit Karma, which is free and updates your score every week. Between month 6 and month 12, if you have been paying on time and keeping your utilization low, you can apply for a second card, something like the Discover It Cashback or the Chase Freedom Rise. Keep your secured card open even after you get the new card. Closing it would shorten your credit history and hurt your score. And by month 12 to 24, with responsible use, your score will typically be somewhere between 680 and 720. At that point, you can get standard credit cards, qualify for apartment leases on your own, get better interest rates on car loans, and honestly, your financial life in America begins to feel real. Let me quickly show you why this matters so much with real numbers. Without a credit score, if you want a car loan, you are looking at interest rates of 14 to 20% or even higher. With a score above 720, that same car loan might cost you 5 to 7%. On a $20,000 car loan, that difference could save you thousands of dollars over the life of the loan. Without a score, many landlords will simply refuse to rent to you. With a good score, you get approved easily. Without a score, you are stuck with prepaid phone plans. With a good score, you get postpaid plans with better deals. The credit score touches almost every part of your life here. Before I wrap up, let me tell you something very important that most people do not know. If your credit card application was denied, you have a legal right to know exactly why. The law requires the bank to send you what is called an adverse action notice, a letter explaining the reasons for rejection. If you did not receive one, you can call the bank and ask for it. This letter is incredibly useful because it tells you exactly what to fix. Also, and this is new for 2025, if you use buy now, pay later services like Affirm, Klarna, or Afterpay, those payments are now being reported to credit bureaus. That means if you make those payments on time, they can actually help build your credit. But if you miss them, they will hurt your score. So use those services carefully. And if you want to monitor your credit for free without even being a customer, Chase now has a free tool called Credit Journey that is open to everyone, not just Chase customers. So let me bring it all together for you. Getting denied for a credit card does not mean you failed. It does not mean the bank hates you. It means you arrived in a system that was not built with you in mind. A system that only rewards people who are already inside it. Your job is to enter through the side door, which is the secured credit card. One secured card. 6 months of on-time full payments. Keep your spending under 30% of your limit. Do not apply for too many cards at once. Go in person to the bank branch if you do not have an SSN yet, and be patient. Your perfect credit history from home may count for nothing here, but 6 months from today you will have built something real, something that belongs to you. Something that this system cannot ignore. You now know exactly what to do. The only question is, will you start today? If this video helped you, share it with one friend or family member who just moved to the United States. They need this information too. And if you have questions, drop them in the comments below. I read every single one. See you in the next video.